Today, we're diving into one of the most talked about stocks in the market, Tesla. But before we get into all the details, let's start with some insight from top market analyst Tom Lee of Fundstrat. In the following CNBC interview, Tom Lee makes it clear he sees Tesla as Exhibit A for a massive V-shaped recovery that's coming soon. He believes that after April 2nd, when investor sentiment shifts, we're going to see a big bounce back in the market, and Tesla could be leading that charge. If he's right, this might be one of the biggest opportunities we've seen in a long time.
I think that's exactly what's happening now, Morgan. First, in 2018, which Michael was talking about, the spike in the VIX or the collapse in investor sentiment or consumer confidence, that all happened around February 2018. So really that coincided with that first low that was made in 2018. And the market began to stage its recovery. I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Rieder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high because we've already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
So what would you be buying right now?
Well, to us, I think Exhibit A for a V-shaped recovery is going to be Tesla because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this bounce, that's a bull case for Mag 7 to be the group to own in the next few months.
So today, we're going to break down everything from Tesla's market positioning to its financial numbers and how all of this ties into broader industry trends. We're talking vehicles, energy storage, AI, self-driving tech, and even some of the risks. And before we jump in further, if you're finding this video helpful, a quick like and share would mean a lot. And if you're new here, subscribing ensures you don't miss out on future insights. Let's aim for 300 likes. Your support really helps this channel's growth and shape future content. Let's kick things off by talking about the mood in the market right now. Investors have been pretty cautious lately. Rick Rieder over at BlackRock recently pointed out that instead of the usual animal spirits driving market moves, people are now in what he calls hibernation mode. In simple terms, folks are nervous and are parking their money in safe, low-risk places like money market funds, rather than taking bold moves. To give you an idea of the scale here, there's about $850 billion just sitting on the sidelines, money that's ready to jump back into the market once confidence returns. Tom Lee sees this as the perfect opportunity. He explained that we've already experienced a collapse in sentiment, and with that huge pile of cash waiting, once investors start feeling positive again, it will likely flow back into stocks very quickly. According to Lee, the key driver behind this shift will be cooling inflation and a potential Fed pivot, which could trigger a rapid rally in risk assets. And look at Tesla. It's already bounced back more than 15% from its recent lows. Lee specifically pointed out that growth stocks with strong brand loyalty and market dominance, like Tesla, stand to benefit the most in a recovery. If the market turns as he expects, Tesla could emerge as one of the standout winners of next year. Now let's shift gears and talk about where Tesla stands in the vehicle market and how that reflects on its financial performance. We all know that Tesla is synonymous with electric vehicles, and despite all the noise, the EV market is growing faster than ever. Globally, electric vehicles are becoming the norm rather than the exception. Governments are pushing for stricter emissions rules, and consumers are becoming more eco-conscious. Tesla, with its industry-leading gigafactories and vertically integrated supply chain, has been able to maintain a major cost advantage over traditional automakers. This isn't just theory. Tesla's scale means it can produce vehicles more efficiently and at a lower cost per unit than many of its competitors. In Q4 2024, for example, Tesla's total automotive revenues came in at about $19.8 billion. That's a solid figure that shows strong demand for its vehicles despite a challenging global economic climate. When you add in revenue from energy generation and storage, which hit around $3.06 billion, and services and other revenue of roughly $2.85 billion, Tesla's total revenues for the quarter reached about $25.7 billion. These aren't just big numbers. They represent Tesla's diversified revenue streams beyond just selling cars. And speaking of cars, let's talk a bit about what's happening on the production and delivery side. Tesla continues to lead in terms of production efficiency and vehicle deliveries. The company's ability to deliver cars at scale has always been a major competitive advantage, and it's one of the reasons investors keep coming back. Lower cost per vehicle, which in Q4 reached its lowest levels ever at under $35,000, reflects not only improved raw material costs, but also better absorption of fixed costs, thanks to higher production volumes. This is a huge win for Tesla because it means more profit from every car sold. But it's not just the core automotive business that's exciting. Tesla's energy division is turning heads too. The Megapack and Powerwall products are in high demand as the world shifts towards renewable energy and efficient storage solutions. In Q4, Tesla's energy generation and storage revenue hit around $3.06 billion. That's a strong indicator that this segment is growing rapidly and could eventually become as significant as the automotive side of the business. With the global demand for energy storage increasing every day, Tesla's early investments in this area could pay off massively in the long run. Then there's the Cybertruck, a product that's been highly anticipated and is finally making its mark. Whether you're a fan of its bold design or find it a bit too unconventional, the Cybertruck represents Tesla's commitment to innovation and expanding its product lineup. Early indications suggest that demand for the Cybertruck is promising, and it's opening up an entirely new revenue stream that complements Tesla's traditional vehicle business. Now, let's move on to Tesla's investments in technology, specifically AI and self-driving. Tesla is not just about making electric cars, it's also at the forefront of the autonomous driving revolution. Their full self-driving system is continuously evolving, and they're investing heavily in AI to push it to the next level. If Tesla manages to achieve fully autonomous driving, the implications are enormous. It could transform Tesla from a car manufacturer into a technology and services company, opening up revenue streams like ride-sharing, logistics, and even licensing of its self-driving technology. This is a long-term play, but it could be a game-changer. Speaking of bold moves, here's a fun fact. Did you know that Tesla's Gigafactory in Shanghai was built in just 168 days, making it one of the fastest large-scale factory constructions ever? It now produces more cars annually than Tesla's original Fremont factory. Now let's circle back to the financials with a broader perspective on the vehicle market, and then drill into some numbers. We already touched on the fact that global EV adoption is on the rise, and Tesla is right at the center of that transformation. Their ability to produce high-quality electric vehicles at scale gives them a significant edge over both legacy automakers and newer entrants. This scale is reflected in their impressive quarterly performance. Looking deeper into profitability, Tesla's operating income for Q4 was reported at $1.6 billion on a JAP basis, which is a testament to their cost control and operational efficiency, even when facing headwinds like rising raw material costs and supply chain challenges. These figures show that while Tesla is aggressively investing in growth, it's also managing its expenses well enough to maintain healthy profit margins. One of the standout aspects of Tesla's financial performance is its ability to generate cash. In 2024, Tesla reported an operating cash flow of $14.9 billion for the full year, with about $4.8 billion generated in Q4 alone. This strong cash flow is critical because it provides the company with the flexibility to invest in new technologies, ramp up production capacity, and continue innovating across its product lines. And speaking of investments, Tesla's free cash flow in Q4 was around $2 billion, which further underscores its financial health and ability to fund future projects. When you put these numbers in the context of the broader market, they paint a picture of a company that isn't just riding a wave of hype, it's building real tangible value. Tesla's financial strength, combined with its leadership in the EV market, energy storage, and autonomous technology, makes it a compelling play for those looking to invest in the future. Of course, no investment is without its risks. We need to consider the competitive landscape. Traditional automakers like Ford and General Motors are ramping up their electric vehicle production, and new players from China, such as NIO and Xpeng, are making significant inroads in key markets. While Tesla currently holds a strong lead, increased competition could put pressure on margins and market share in the future. There's also regulatory uncertainty. Government policies, such as changes in EV tax credits or new tariffs on imported components, can quickly alter the business landscape. Any shifts in these areas could impact Tesla's profitability and overall financial performance. And then, there's the ever-present factor of Elon Musk. There's no question that Musk is a visionary, but his involvement in other high-profile ventures like SpaceX, Neuralink, and his sometimes unpredictable social media presence can lead to volatility in Tesla's stock price. That's something every investor should keep in mind. So where does all of this leave us? Tesla is much more than just a car company. It's a technology leader with massive potential in multiple sectors. from electric vehicles and renewable energy to AI and autonomous driving. With a solid financial foundation reflected in impressive revenue figures, healthy operating income, and strong cash flow, Tesla is well positioned to capitalize on the growing global demand for sustainable and innovative technologies. As soon as investor sentiment shifts and that cash starts flowing back into the market, Tesla's high liquidity and strong fundamentals could attract significant institutional and retail investment. Now, I know this is a lot to take in, and you might be wondering, should I invest in Tesla? Well, here's my take. If you believe in the long-term potential of electric vehicles, renewable energy, and autonomous technology, then Tesla is definitely worth a closer look. But, as with any investment, it's crucial to do your own research and understand your risk tolerance. Tesla has enormous upside potential, but it also comes with its share of challenges, from rising competition to regulatory hurdles and the unpredictability that sometimes comes with Elon Musk's leadership. What do you think? Are you planning to buy Tesla stock? Do you see it as the leader of the next bull market? Or are you leaning toward caution and staying on the sidelines for now? We all love a bull market until it turns into a bubble. Every time stocks hit record highs, there's always that lingering question. How long can this last? Because when corrections happen, they happen fast. Just look at 2008. Stocks collapsed, but gold soared nearly 250% over the next decade. And right now, history may be repeating itself. With Trump's recent tariff policies stirring market volatility, spot gold prices have jumped past $3,057 per ounce. If you've ever wondered how everyday Americans can take advantage of this growth, I found a company that provides a free guide that explains exactly how to add real gold to your retirement savings. No pressure, no obligation, just clear, useful info. Click the link in the description to grab your copy now, because the best time to prepare isn't after the crash, it's before it happens.